Birmingham's property boom, investment potential post HS2. Let's get one thing out of the way first. HS2 might have hit a few bumps, okay, more like full-blown roadblocks. But Birmingham, it's still buzzing. I mean seriously, have you been to Digbeth lately? You'd think someone sprinkled regeneration dust all over the place. Now, before you roll your eyes and say, here we go, another hype piece about Brum, hear me out. I've been in the game for over 2 decades. Seen markets rise, fall, stagnate, erupt. And right now, Birmingham is quietly becoming the UK's second capital. Yeah, I said it. Let's rewind a bit. Back when the HS2 plans were first dropped, investors were scrambling. I remember a client of mine, early 2014, bought a tired 2-bed Victorian terrace in Bordley Green for $118K. People laughed, said it was a bit too east for comfort. Fast forward to 2025, and that same place just sold for $227K. No major refurb, just a lick of paint and smart staging. That's not a fluke, that's a wave. So, what's driving this boom? First, connectivity. Even with the scaled-back HS2, the city's still reaping the benefits. Massive station upgrades, better commuter links. More street and new street stations now look like mini airports. The locals joke about getting lost between platforms. Second, young professionals. I swear, every time I visit the jewelry quarter, it's full of creatives, techies, and startup founders sipping cortados in co-working cafes. And where they go, the money follows. Rents in JQ are climbing faster than you can say Art Deco penthouse. And don't even get me started on the build-to-rent sector. Massive US and Middle East funds are pouring in. They're not here for fun. They smell profit. One developer I spoke to last month has already secured planning for 600 units in Perry Bar, banking on the Commonwealth Games afterglow. Yes, that's still a thing. Here's the kicker. Prices are still accessible. Compared to London, Birmingham's practically on clearance. I've got investors snapping up new builds in Aston for under $250K. Where else can you get a 2-bed flat with skyline views, concierge, gym, and parking for that price? It's mad! But let's not sugarcoat everything. There are risks. Some areas are. I had a viewing in Netchells recently where even the Uber driver hesitated. Still, even there, prices have crept up 12% in the past year. That's the HS2 halo effect in full swing. Also, note this, student accommodation is oversaturated. If you're thinking of going down that route, think again. I had a landlord last October who couldn't let his studio near Aston Uni for 3 months. 3! In Birmingham. Why? Too much supply, not enough real student demand. Especially post-pandemic with hybrid learning still lingering. So, what should you be looking at? Regeneration hotspots. Digbeth, Ladywood, Sturchley. Underrated suburbs. Erdington, Bearwood. Trust me, Bearwood's got charm. And Yardley. Modern flats with amenities. The city's young renters are picky. Wi-Fi speeds, balconies, bike storage. They want it all. And if you're it for the long game, commercial conversions are quietly making a comeback. I helped a client convert a small office block near 5 Ways into 5 flats. Planning was a headache, but the yields? Chef's kiss. He's now pulling in 7.8% gross. No kidding. One last story. A young couple I recently helped. Both first-time investors, late 20s, bought a duplex in Edgbaston for $189K. Turnkey, modern spec, close to the tram. 2 weeks later, 2 weeks, it was let for £1,100 PCM. They've already called me asking, should we buy another? And honestly, I told them yes, because in this market, waiting could cost more than acting. So Birmingham, not just Cadbury and Canals anymore.